Trying to figure out how we gon' get this bread right. Life a blindside you, so it's best to prepare right. It take one night, wrong place, in the wrong time, it can change us. Growing up is never like you planned. Shout out the people that did struggle with no help.
Hey guys, so last week we talked about your top 5 credit cards for 2021. And I want to publicly acknowledge that no, I'm not a sponsor of any of those cards yet. But Apple, American Express, if y'all see this, yeah, please. I will happily endorse either one of you two. But anyway, I want to announce, number one, I'm loving the energy you guys are giving me in terms of subscription and follows. I also want to say that for a giveaway going forward, our 200th subscriber, you'll be getting a free stock.
My God! Okay, it's happening. Everybody stay calm.
What's the procedure, everyone? What's the procedure?
Stay calm! Wait.
I'll find out who you are whenever you think, or you can DM me, and I will give you a free stock. Granted, we can go back and forth as to which one you want. Don't break my pockets and try and say Tesla or whatever, but you'll get a free stock, and we can discuss that later on when that happens. But again, 200 subscriber, free stock. But today, we're following up a credit month, and we're going to talk about what makes up your credit report. Your credit report is made up of 6 heavily important factors that we're going to get into today. So, thanks for tuning in, and let's get started. So, 6 factors that make up your credit report are going to be your payment history, your credit card usage, any derogatory marks that you may have. We'll get into what those are later. Your credit age, your total accounts, and your hard inquiries. Now, if we break that down, you're looking at 6 really important factors, and I feel like it's only fair that we get into exactly what those things determine, or like how you can understand how your credit score works. So first things first, which is the most important thing, we're going to be looking at your payment history. Your payment history determines that, hey, can I pay this money back? It doesn't matter if it's a credit card, a loan, student loans, whatever, but a bank wants to be able to see that you can pay something back if you borrow X amount of money. Now, you may not think of credit cards as heavy factors of your payment history, but that is the biggest factor. Literally, whenever you're approved for a certain amount, like let's say you're me and American Express approves you for, I don't know, $1,000, and I go and rightfully spend $700 of that $1,000. At a certain point in time, American Express is going to say, hey, you owe us $700. And it may look good to say, hey, yeah, I can give you guys all your money all at once, the entire $700, but your payment history actually looks a lot better when you pay them back flexibly. Like, you don't give it all at once, but you show that I can make consistent payments to you guys and pay you back the money that I owe you. With, again, if you're doing it smart, you're doing it without interest, of course. But payment history is probably one of the biggest factors, if not one of the heaviest factors that determine what your credit score is going to be. So obviously, if you have bad payment history, you're going to have bad credit. There's no way to have bad payment history and have good credit. It's not possible. I don't care who you are. Pay the credit cards back, or pay back your student loans whenever you get a chance to. No rush. Come on, Joe.
Come on, man.
And eventually you'll see that you're getting better credit. You're getting a better credit score. It's simple. Pay them back flexibly, on time, and you get a better credit score. Now, your second biggest factor is your credit card usage. So that's a tricky one because not everybody really knows as to how your credit card usage really plays a role. But the way that credit is given to you, we're given to it in limits. You have a set amount that you cannot go over. So again, to use American Express, and please, I hope you're watching this video because I want you to sponsor me. Let's say they give you a limit of, again, $1,000. Ideally, if you want a really good credit score, you want to be able to use less than 30% of the limit you're given. So if you're using more than 30%, it shows that, hey, you have a really high usage rate, and it can be pretty funny to certain banks because it's just like, are you spending more than your means, or do you need a higher credit limit? Like, banks, honestly, they don't know you physically, but in any event, the amount of money that you're spending is a heavy indicator of how they're going to look at you, because if every month you're constantly maxing out your card, but you're paying it off, it looks kind of funny. Like, they're going to insist that either, hey, where are you getting this money from, or based on your approval, because generally whenever you're approved for a card, it's going to ask you for your income. Your annual income is whatever you calculate from whatever your job is. And they use that to determine how much money to give you in terms of a credit limit. Now, if you often find yourself overgoing that limit or going above 50%, it's gonna look really negative because it's just like, can you not manage how you're spending, or are you impulsively just buying? So your credit card usage is another really big factor. Again, you always want to be under 30%. I know it's pretty hard to stay under 30%, but Lord knows I've been trying, and I faithfully I have. But again, you want to be under 30%. I'm not saying you got to cut down on spending, period, but if you're going to be able to spend, be able to pay it back. So if you keep your credit score you keep your credit card usage under 30% and you're paying it back efficiently, you're hitting pretty much two of the biggest factors that determine your credit score, which are your payment history and your credit card usage. So derogatory marks, for number one, nobody wants these on their credit score. You don't want them. Derogatory marks are basically accounts that you have in collections. So basically, again, if I have $1,000 from American Express and I run up the entire $1,000 and I don't pay them back for X amount of months, your account can fall into collections, which is why we have debt collectors who will be calling you constantly nonstop. Now, your best bet is to try and avoid derogatory marks. Try to pay those cards in on time and pay more than you owe if possible for the end of the month. But you want to avoid seeing any account there. Those are hard to follow. I think they take like about 7 years to recover from. It's ridiculous. Avoid getting any of your accounts in derogatory marks. Literally just try and pay your cards off as best as possible. If you can't pay them off, reach out to your bank and explain to them like whether you're having a hardship or whatever the case may be. But if you want to have good credit, avoid derogatory marks. I've been lucky enough to have none on my credit score so far, and I don't plan on ever getting them. But that is the biggest factor I want to say that would negatively impact your credit score. Avoid derogatory marks. So the next two factors are credit age and total accounts. Now, those two factors are kind of more so intertwined because they kind of relate to one another. So, for example, your total accounts is the entire combination of every single card, loan, or whatever it is that's in your name that has been required to run your credit. Now, your credit age is the average of every single card or account you've ever had open for you. So those two factors are really important because they can kind of show how new you are to credit and then how much credit you have available to you. So for me, I have 7 cards and my total credit age is 1 year and 9 months. Now, I've had credit older than that, but remember, it's the average. So it takes all my cards up. Now, when you're applying for new cards, it's going to show that, hey, it's going to drastically drop your credit age because it's a new card, so 0 months, 0 years. So drastically drops the average age of your credit. But again, the whole point is that you're going to have credit for longevity. So you want to keep these cards open longer so they age better on your credit report. And then eventually, if you're opening several different accounts, you have a great mix of credit age and you have a great mix of total accounts. So your accounts can be credit cards, they can be loans, they can be car loans, business loans, things of that nature. But it's just important as to the types of, I would say, credit available to you that would impact your total accounts and how long you've had them that impact your total credit age. So those two factors, they might not weigh heavy as the other 3 that we've mentioned, but they're still important to look at. So keep in mind that when you're applying for new cards, you're drastically going to be dropping your credit age and you're adding a new account to the amount of total accounts you already have. So those 2 factors, again, not as important as the previous 3, but important nonetheless. The last category, which is probably one of the most important ones, is hard inquiries. So a hard inquiry is basically anytime your credit is ran. Whether you're getting a car, whether you're applying for a credit card. Anytime that they have to run your credit report, that is a hard inquiry. Hard inquiries are, in my opinion, one of the hardest things to manage because those don't come off your credit report for 2 years. Every hard inquiry, every single time you apply for a card and your credit is ran, they do not come off your card for 2 years. Different banks can use different credit reports, but one way or another, that bank is going to show up as, hey, it ran your credit. Now, I have cut down on the cards I've been applying to, so my hard inquiries have started falling off. Granted, there are going to be cards that I want in the future, but you want to be able to keep your hard inquiries under 3, and I mean under 3 over 2 years, because these hard inquiries, they put a dent to your credit score. Now, I know it may not seem like well, it may not make sense, but every time you apply for a card, initially it's going to drop your credit score because a hard inquiry knocks a little bit of points off. But once that credit card is now registered, it shows that it's going to impact other areas too, because you have your total credit usage available to you. Because you added a new credit card, you add more money to that. So now you have more available credit. It's also then lowered your credit utilization rate. It's added another account available to you. And it also shows that, hey, you're not going above what's looked at as the 30% rule. So all the different factors of your credit score, they work together and they heavily impact other areas. So when understanding your credit report, those are the big 6 factors you want to look at. You want to be able to say, hey, I have this much credit available to me, and here's how I'm managing it, whether I'm going over or below 30%. You want to be able to say, hey, I have no derogatory marks, so that shouldn't neglect or diminish the chance of me being improved. You want to say that you have a pretty decent credit age, because if you can show that you experience your credits, again, you're more likely to be approved by a bank. You also then want to show that you have a wider variety of accounts, because the wider accounts you have, the more likely a bank is to trust you with new forms of credit. And you want to make sure that doesn't look funny because you're applying to so many cards at once and having a lot of hard inquiries appear on your account. Some banks won't even approve you if you have more than 5. I know Chase has a rule where they say if you have more than 5 cards in the past 2 years, we will not approve you for any more cards. So just keep that in mind when you're looking at new credit cards, okay, guys? But again, thank you for tuning into Finance Fridays. Remember, 200 subscriber gets a free stock. 200 subscriber, free stock. Let's talk about it. But in all honesty, I do appreciate the support. I'm going to be here for many Fridays to come and go. And let's get serious about our credit, guys. Seriously. There's nothing to play with. Thank you.
We trying to figure out how we gonna get this bread right. Life a blindside, so it's best to prepare right. It take one night, wrong place, and the wrong time. It can change. Growing up is never like you planned. Shout out the people that did struggle with no helping hand.